and Lee Munson, Chief Investment Officer of Portfolio Wealth Advisors. We'll start with you, Lee. How are you feeling? Where do you put your money?
Oh, I'm feeling really good. We're overweight tremendously in small cap value, and we're out of the growth names, right? And so in the last 48 hours, we've had, if you put it this way, in the last 5 years, the S&P has outperformed small cap value by 28%. And in the last 48 hours, 15%, almost 20% of that gap has now compressed. And so if this is the start of something, that sounds great. But what we're seeing is a rotation out of these big growth names, and we're seeing a rotation into cheap, smaller stuff. It's been years and years since we've seen this value premium crop up. And let me just say, I'm very excited to see it. And that's where I think you should put your money in, and not the S&P.
I think it's very interesting because, to your point, and D.R. Barton, I know you'll appreciate this, is that if you're out of the market, you just move to cash and you miss any one day in the market. I mean, there's only maybe 10 big days a year, right? And I know, D.R., that you've been sort of interested in some of the commodities like gold and silver, right?
Yeah, and there is a flip side, Nicole, to that miss the 10 big days. You can also miss the 10 big down days, but that's another story. We're not here to talk about market timing versus passive management. But yes, I think that Lee made a really interesting point. There have been some things that haven't been touched in a long time that are starting to perk up. One of them, of course, precious metals. We've seen how big a move they've made amidst the turmoil. We used to talk about gold as an inflation hedge, and I think really as a trader investor, it's much more useful to think about it as an uncertainty hedge, and that's certainly what's shown up amidst all the trade conflict that we've had, and has helped drive those numbers, the dollars per ounce numbers on gold up. But what we've also seen is something pretty unusual, and that is the ratio of an ounce to gold to an ounce of silver. How many ounces of silver will 1 ounce of gold buy? The answer in July got up to 93 times. Gold was 93 times more valuable. The most it's been, that's the biggest that ratio's been since back to 1994. So that is a number that we haven't seen in a long time. And I think what's going to happen is, as we move toward, this is an intermediate term look, Nicole, as we move toward getting some tariff, the next round of what they're going to do, I believe silver is going to play some catch up and is a good value to buy the silver ETF or options on the silver ETF SLV right here.
That's very interesting. So we'll watch both of those. Lee, you were talking about the small caps, and we're talking about some of the catch up or some of the get out. I mean, the FANG stocks, you had some thoughts on those.
Well, yeah, I mean, these FANG stocks, I think that these are the things that you want to move away from. When you start looking at their place in the S&P, it reminds me a lot of .com. We've got 30% of consumer discretionaries in the S&P sector, and 30% is just Amazon. When you look at communication services, half of that sector is just Apple and Facebook, and the same thing for IT with Microsoft and Google. So I think that when you look at the composition of the S&P 500, it's very overweighted, especially in those three sectors, just to these FANG stocks. And all we need is to have a little negative momentum. And people starting to see what we're seeing. I agree about the silver trade. And I agree with myself about that small cap value trade. People are going to start looking for what has value and what is severely beaten up. So when you look at small cap value, and like, hell yeah, you should look at silver too. There's just so many tremendous opportunities that are not hoping that Facebook has another blowout quarter and hoping that they're not going to have any problems in Washington, D.C. And I think the same goes for stocks like Uber and Lyft that have tremendous regulatory concerns. So I say get out of those regulatory problems, get out of that uncertainty, and go with things that have low valuations. And I think the lowest valuations, you just heard of two of the best low valuations here.